Good day and welcome to MUN Infra-Construction Ltd Q1FY2024 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yashish Parekh, AGM, Investor Relations and Corporate Finance from MUN Infra-Construction Ltd. Thank you and over to you, sir.
Thank you, Lisa. Good evening, everyone. A warm welcome to everyone attending the Q1FY24 earnings call of MUN Infra-Construction Ltd. We have Mr. Parag Shah, the Chairman Emeritus of the company. We have Mr. Manan Shah, the Managing Director of the company. And we have Mr. Ashok Mehta, the Group CFO of the company. Now I would request Mr. Manan Shah, the Managing Director of MICL Group, to take you through the business and performance of the company. Thank you and over to you, Manan.
Good afternoon to all our listeners. I, Manan Shah, the Managing Director of MUN Infra-Construction Ltd, welcome you all to this earnings call. Allow me to express my heartfelt appreciation to all the esteemed shareholders of the company for their steadfast confidence and unwavering backing. Before I proceed with my evaluation of the company's performance, I wish to extend sincere gratitude for their enduring trust and support. In the first quarter of the financial year 2024, we have declared a second interim dividend of rupees 0.36 per equity share on 37.13 crore of outstanding shares having a face value of rupees 2 each for the financial year 2023-24. In all, we have declared total dividend of rupees 0.72 per equity share. Let me present a concise overview of MUN Infra-Construction Ltd's India's premier integrated EPC player with almost 6 decades of experience in the construction industry and a decade in real estate development. MICL Group has successfully completed approximately 7 ports across India, encompassing over 250 hectares of infrastructure works in the EPC segment. Additionally, the company has accomplished 13 real estate projects, all completed ahead of schedule, thus ensuring its commitment to stringent timelines and elevating industry standards, with some projects delivered at least a year ahead of the scheduled date. The EPC division of the company, engaged in contracting for ports, infrastructure, government projects and owned residential ventures, generates EPC margin or PMC income, with a distinct emphasis on enhancing the bottom line. Within real estate, the company adheres to an asset-light strategy where it is involved in joint development agreement, example Aradhya High Park, which is at Mira Road, or joint venture, which is our Atmosphere project at Mulund, Insignia project at Vileparle, or development and marketing model at Tardev, the project named Aradhya 1. The business philosophy of MUN management has allowed the company to establish itself as one of the foremost names in the construction and real estate industry within a short span of time. We express optimism that the forthcoming launch of the projects in the near future, along with the acquisition of projects currently undergoing due diligence, shall herald the commencement of a new chapter of the growth of MICL Group. In last few months, we have seen a healthy business development in both the segments. On the EPC front, the company bagged another large-size port order worth 680 crores from BMCT Group, which is PSA, for pavement work on the reclaimed earth for the execution of Phase 2 infrastructure works at the 4th container terminal of JNPT. We are grateful to have both the responsibilities of the land reclamation and infrastructure development for the pavement work on the reclaimed earth. We are committed to deliver this new BMCT infrastructure project within time frame of 2.5 years from the date of receipt. With this new order, we have strengthened the EPC order book, which now stands at approximately over 1,265 crores. Going forward, this will probably higher revenue visibility. On the real estate front, we proudly announced the latest addition to our real estate portfolio of an ultra-luxurious residential project in Ghatkopar East, Mumbai, having a sellable carpet area of around 4 lakh square feet and construction area around 13 lakh square feet. This upcoming venture marks a pioneer milestone for MICL Group as it embarks on the development of a 10,000 plus square meter gated community, a first of its kind in Ghatkopar East. The successful acquisition of development rights from 10 societies for this project stands as a momentous achievement, accomplished throughout a landmark cluster redevelopment scheme. I extend my sincere congratulations to all the dedicated team members whose unwavering efforts facilitated the seamless execution of this acquisition. Anticipate to unfold over the course of the next 4 years, the project holds substantial revenue potential estimated at around 1,200 crores. As we look ahead, we are filled with great anticipation for the forthcoming launch of our esteemed project Aradhya Avan, located in the Tardev area of South Mumbai. Construction is already underway and we envision this development to emerge as towering architectural masterpiece, setting new standards in the global skyline. We are committed in our conviction to achieve this vision with an unparalleled timeline in the lines with the exceptional success of our previous ventures. Currently, the real estate portfolio of MICL Group is estimated to be around 4.6 million square feet, which comprise of around 2 million square feet of ongoing projects and 2.6 million square feet of upcoming remaining projects. Among the upcoming projects, we have added approximately 1 million square feet of carpet area in ultra-luxurious segment in the premium pockets of MMR region, that is Ghatkopar East and Tardev. We have already started getting inquiries for the bookings in these projects and we are hopeful to achieve a healthy response during the launch period. We are excited to launch these projects in the current financial year during the festive time. Now, I would like to provide you a quick update on our ongoing projects. Out of our 19.68 lakh square feet of carpet area in the projects, we have sold nearly 14 lakh square feet, which turns out to be approximately 70% sold off from the total inventory. Among our completed projects, which we have received OC, we do not only have negligible inventory unsold. Shedding light on the construction status of our ongoing projects, the Ghatkopar project Aradhya One Earth, the Dahisar project Aradhya High Park, ENF Towers, and the Mulund project Atmosphere O2 towering D and E, we have completed the RCC work and finishing work is in progress. We expect to deliver these projects during the current financial year. During the quarter, we sold 60,000 square feet of carpet area with a booking value of rupees 143 crores, mainly driven by bookings from Aradhya Parkwood, which is the Dahisar project, and Mulund project as well. As most of our ongoing projects are nearing completion, as mentioned above, we have achieved a healthy collection of rupees 276 crore during the quarter. We believe that the Mumbai real estate market, which is witnessing a healthy demand in the poise for notable growth in the upcoming years, are in the favorable policies on redevelopment, positive macroeconomic climate, and advent of noteworthy urban infrastructure projects. These advancements offer promising prospects for developers and investors alike, instilling optimism for the future years. Furthermore, on the global stage, our subsidiary MICL Global, in collaboration with Marriott International, has introduced Edition Residences, making Marriott inaugural branded project in Fort Lauderdale. The project has received a positive response from customers, igniting our enthusiasm for the potential of our other ventures in the US portfolio, including Miami Beach, Ponce, at Coral Cables, which are at the initial stage of approvals. Till date, we have transferred around $29 million, but we have $15 million as liquidity also over there. So we have invested $14.5 million till now, and $15 million we have a bank balance over there for the projects which we have already undertaken for the near future. In the last 5 years, the company has accomplished a strong financial track record with nearly 50% CAGR in revenue from operations, with a corresponding 43% CAGR and 58% CAGR in EBITDA and net profit. This was mainly driven by timely execution of our EPC orders and recognition of revenues from ongoing real estate projects and those delivered in the past. As the company follows percentage completion for accounting, the performance may fluctuate on quarter basis. Hence, I urge everyone to look the company from annual perspective. Now, let me run through the highlights of the consolidated financials for the Q1 of financial year 2024 of the company, post which we will have a question and answer round. Q1 financial 2024 has been the 9th quarter of consecutive year-on-year growth in the revenue from operations. The quarter witnessed strong growth in revenue from operations of 45% year-on-year to rupees 510 crore compared to rupees 352 crore in the previous year. The total income of the company also grew by 45% year-on-year to 524 crore compared to 360 crore in the previous year. The EBITDA also grew by 63% to rupees 109 crore compared to rupees 67 crore in the previous year. After paying of rupees 313 crore of secured debt during the financial year of 2023, the financial cost during the quarter has significantly come down by 36% to rupees 9 crore from rupees 15 crore in the Q1 of financial year 2023. Net profit jumped by 112% to rupees 82 crore compared to rupees 39 crore in the previous year. The company has consistently focused to reduce debt and improve liquidity, which has helped in maintaining balance sheet strength. Secured debt stands at rupees 136 crore as on June 2023. The company continued to be net positive and has liquidity of over 530 plus crore as on June 2023. Moving forward, our steadfast commitment lies in pursuing projects that augment our top-line growth while diligently striving to enhance profitability and uphold robustness of our balance sheet. Our project timeline and pipeline remains robust, and we possess the financial strength to support new acquisitions and ventures as we move forward. We are now open for the floor for questions and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Agarwal from Nuvama Wealth. Please go ahead.
Yeah, thanks for the opportunity. I had a couple of questions out here. Firstly, with some of the other developers also claiming to build India's tallest towers, how would you say is the demand looking at? And also, how do you expect your business development momentum during the course of this project?
Good afternoon. So, we are not claiming exactly to be the tallest in the country. It's definitely a super high-rise tower that we are coming up with, which is going to have a height of more than 300 meters. But the momentum is definitely looking strong. The market, the inquiries that are coming in, people, the broker network which has been currently talking to us regarding this particular project is very, very strong. And this tower has created its own impression in the market in South Mumbai, which is looking very fruitful for us in the near future.
Sure. Thanks for that. Secondly, could you also help me with all the real estate projects which you've contributed to the collections of about 276 crores during the quarter? And also, what would be the timeline of execution for the current EPC order book?
So the details in the real estate projects, you can just mail it to us. We can have you the details sent over regarding the contribution from all the projects. And talking about the EPC pipeline, we've got a significant pipeline going on and upcoming of our own projects, where we see a secured pipeline of nearly next 5 years, which consists of our own projects as well and port projects as well.
Sure, thanks. Last question, if I may. There's a bit of a jump in cash. So what has led to that? And in terms of real estate, coming back to real estate, what kind of projects are we looking at going forward? Would they be in luxury, ultra luxury, or affordable, or premium segment? Which segments would they be in? Thank you.
So we would like to focus honestly on a holistic approach, where we would not want to stick to a particular segment or a genre. We would focus on mass housing, also premium to ultra premium segment as well. And the jump that you're mainly seeing is basically the collections that we've been coming in from the past performance that we've given, and the inventory that's been sold. It's now getting realized, and the projects are almost on the verge to get completed. So that's where you will see a significant cash flow coming in.
Sure. Thanks a lot. That's all from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Neha from NBS Brokerage. Please go ahead.
Hello sir, good evening. I would like to ask that we do have ground projects in our hands. So do we have any bid for water projects as well? Hello?
No, we are focused on the mainly onshore projects only.
Okay. Also, sir, I would like to ask, do you consider taking up any redevelopment projects in future? Because a lot of builders become very reluctant to take up, and instead they prefer new projects.
Sure. So as you see, our prima facie forte has been redevelopment, and we've been continuously taking redevelopment projects. The recent project which we acquired is also a redevelopment project in Ghatkopar East, which is 10 societies getting clustered into one. So yes, we would definitely be keen and taking more redevelopment projects in the future.
Okay. Okay, sir. Yeah. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Darshil Zuberi from Crown Capital. Please go ahead.
Hello, good evening sir. Thank you so much for taking my question, sir, and congratulations on a great set of results. So I would just like to know what kind of revenue growth do we envisage for this year, and maybe a long-term growth in the next 2-3 years with our new projects coming in, and what would be the margins that could be? Our margins currently have jumped up a bit, so would this margin be sustainable, or could we see further growth?
Thank you so much. So basically, as you're saying, the focus would be there prima facie on both the sectors. We are strongly pursuing to bid good infrastructure EPC orders as well, and at the same time focusing on taking some good projects in Mumbai in real estate division. The margins that you're seeing, yes, is definitely sustainable, because the kind of projects that we've taken now stands at a very premium location in the city of Mumbai, and will definitely contribute to a good margin. And that's how we see the upcoming quarters also looks like.
And sorry sir, in terms of revenue growth, could we have some either of maybe a ballpark figure of how much we could probably grow in this year?
See, we are very confident on what numbers that we've clocked in the last financial year, where we would definitely be sustaining that, and we are seeing a much better revenue growth overall in the top line and bottom line as well for the upcoming financial year.
Okay. Thank you so much, sir. All the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants in the conference, if you wish to ask a question, you may please press star and 1. The next question is on the line of Manish Ostwal from Nirmal Bang Securities. Please go ahead. Mr. Ostwal, your line is in the talk mode. Please go ahead.
Yeah, am I audible?
Yes, sir. Please proceed.
Yeah. Thank you for the opportunity, sir, and congratulations for the good set of numbers, consistent performance quarter by quarter. So my question is, we have added 2 projects during the year. So can you guide us in terms of what value of business addition will happen in the rest of the financial year in terms of value of projects or square feet? If you can guide us, that's the first thing. And second thing is, sir, our investment in Florida, Miami, where we have invested money. So can you talk about the cash flow visibility in that business in 24-25? That will be quite helpful to us.
Good evening, this is Parag Shah. As far as the Miami business is concerned, Manan has already mentioned that we have a $30 million which we had been invested in USA. Out of that, 15 million is already invested and we have a 15 million liquidity. But the same amount of money we will require for the shape of the projects which we had already acquired. And we are open to invest maybe up to more than $10 to $15 million if required in near future. As far as the India is concerned, I will just give you the overall broad picture so everyone will understand. Port sector, Manan had mentioned that we are doing a port project at Nhava Sheva right now for Port of Singapore Authority. The first contract was 1,250 and some odd crore figure was there, and we got the subsequent second order of 680 crore rupees. Out of that, the first phase, 1,250 crore, around 900 crore rupees work has been completed. There also we are much ahead of the schedule. And the second phase works, mobilizing has already started and the work will start, should be by 1st of September. So, as far as the port sector is there, around 1,000 crore rupees order book still we have, and the completion period is around 2.5 to 3 years. In a real estate projects, we have a total project is approximate 40 lakh square feet carpet, where the construction area is approximate 57 lakh square feet carpet. Out of that, around 8 lakh square feet 6 lakhs has already been delivered. We have taken the OC and the people are living there. Another around 2 to 3 lakh square feet which we are expecting to complete by October end, and that also possession we are giving. And the second phase work has already been started, which is approximate 14 lakh square feet. That's the building number 1, 2, 3 and 4. So out of that we had launched 2 buildings, some 550 flats. Out of that almost 350 flats is already been sold. And in the second phase, another 2 buildings we launched, that is also having approximate 550 flats. We are working at Juhu. That's a redevelopment, Mada redevelopment project is there. Estimated completion date is December 2024. We have completed the basement and we have completed 2 slabs also, and we are expecting to complete RCC by the coming March and another 6 months for the finishing time. Arla, we just handed over 1 project and the people have started moving there, people are staying there. Then opposite to that, we are doing another project which we are expecting to start by October, latest by November, which is having approximate 4.2 lakh square feet carpet. No, I think it's around 4.4 lakh square feet carpet area is there, and the total construction area is approximate 15 to 16 lakh square feet. As far as Ghatkopar, our first project is concerned, 50% occupation we have received and we have delivered also. Balance project, RCC is finished, brickwork plaster is finished, we are doing the tiling work, plumbing, electrical work and the services work, which should be getting over by October or November, and we are expecting to complete the project in all respects by December. Before that, we are expecting to start another Ghatkopar project which Manan had mentioned, the 10 building society is there, which we are estimating to start the work by October. We are in the process of getting the permissions. Part permissions has come and the balance permission is in a queue. Tarjev project, estimated height is 312 meters. We got almost all the permissions. Some part permissions are still left with the Mantralaya, and I believe that it should come in next 10 to 15 days time. There also the work has been started. And the balloon project is there where 3 buildings we had already delivered, which was phase 1. In a phase 2, another 2 buildings are almost ready. We are expecting OC in next 1 month time. And the 3rd and 4th building is still another 2 years will take. We did one commercial building also, which was around 22-23 story building, which is also getting over by these 2 buildings. So by this October, we are completing another 3 buildings and then the 2 buildings will be left. So that's question.
Yeah, thank you for the insightful answer. Sir, one more question on the Tarjev project. I read one news article where it was mentioned that the Tarjev project we have a FSI of 10-11. So can you clarify on any regulatory risk we find on our Tarjev project?
No, if you are not aware, because I understand you are not from this industry, in the Mumbai we get the FSI up to 20 also. It's not 10 and 11.
Okay.
So it all depends on in which scheme you are there, what is the size of the plot. We are working on that project on 33-9, and 33-9 is a cluster development, and I am happy to announce that the first project in a western suburb, which was being approved under the 33-9, that was we were doing at the Parla. The second project was approved in 33-9 in a cluster development in the city of Mumbai. That is also belongs to us, which is a Tarjev project. And we recently got the permission last week on a central suburb, which is this Ghatkopar project under 33-9. So till now in the Mumbai, the 3 projects has been approved under 33-9. And coincidentally, all 3 projects are belongs to us.
And lastly, sir, you talked about our investment in Florida and Miami. But my question was pertains to what is the cash flow generation we foresee from those assets, that investment basically.
In the US accounting system, there is a project completion method. So once you complete the project, that balance is you have to show it in your balance sheet. So because we will have to follow the norms over there. So we expect around in next, I think in 2020, by 26-27, we will be able to complete all 3 projects, and which is having a top line between the 2 projects is, I'm not 100% sure, but is around 500 million plus, where we are 25% partner.
How much percentage partner, sir?
Our participation will be 25%.
Okay. Thank you, sir. Thank you for answering all my questions. Thank you.
Thank you. The next question is on the line of Hardik Gori from Alpha Plus. Please go ahead.
Thank you for your opportunity and congratulations on a great set of numbers. Currently, I believe most of your projects are under JV and DM model, and there is no land acquisition involved. So going forward, would you be looking at more JV or more on DM models?
Yes, we are more always keen on a DM model or a JV model. It's not the question of only investment, but when we enter into a DM model or a joint venture agreement with someone, at that time normally some of the approvals has come up, like the most of the 50%, 60% work has been completed. So if normally the developer acquired a land, and when the construction starts, it takes 2.5 years in a normal course. Whereas in this model, you can start the work in next 6 to 7 months' time. That's the primary reason. The secondary reason that the redevelopment of the building or a DM model or a JV model where your investment is reducing, your risk factor is reducing. And till now, whatever the projects which are in a pipeline or whatever we are executing, the financial closure of all the projects has been done. In our books, there are certain loans which you can be able to see. Out of that, it's not 100% loan. Out of that 50% amount is a contribution of the partners. Because in real estate company, we always run a subsidy companies. And in subsidy companies partner, their contribution also comes in our balance sheet as a loan. So actually, we are having approximate 80 to 90 crore rupees or not more than 100 crore rupees loan as on today from all the banks loan. And we are sitting on a liquidity of approximate 300 to 400 crore rupees.
Got it.
We are open to acquire the land also. It's not like that we don't want to acquire the land, but we are not in a hurry to acquire land because with the 25% investment, we have been able to make same amount of money. So we have adopted that model.
Good. Thank you. And that's all from me.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Nakshatra Rathi from Niveshaay Investment Advisors. Please go ahead.
Hello, am I audible? Hello? Am I audible?
Yes, sir, you're audible. Please proceed.
Right. Firstly, congratulations on great set of numbers, sir. My questions pertain to on DM model and the risks that we face in Mumbai's real estate market, because from my scatterboard analysis, what I've gathered is there's a lot of supply. So oversupply is an issue. Do you see that as a threat, or what are other threats that you see? And second question would be on DM model. I wanted to get a little more clarity on the Tardei project side, where you are loaning about 1,200 crores, about 1,000 or 1,200 crores, right? So in what timeline do you see that loan? Yeah.
Sorry, I could understood partly because your voice was not very much audible. But what I understood, you were asking about the DM model. So
yes, sir.
What is the risk factor of DM model? That I could not understood your question.
Yeah, sir. That's my question. Precisely.
Okay. The risk is there is always when you are doing a business. Any business, whether you are a landowner, whether you are doing a JV model, whether you are in a DM model, or whether you are trading in a stock. So I do not understand that any business doesn't have a risk. But yes, in a DM model, your risk gets mitigated because in a DM model, you are not putting the money for a land. You are not giving any deposit to a customer. You are just putting the money for a construction. So more or less it's like in construction finance, or the money has been invested for permissions or approvals or government premiums. So when you are investing the money, it's like more or less like in bank finance. Like all banks are financing construction finance happily to a bank, so it is more or less like in same model. Whereas, yes, the properties also is mortgage with us, we run the accounts, we become the owner in place of owner on behalf of them, and we share our top line. So the benefit over there or a loss over there is, if suppose I have estimated the 30,000 rupees a square feet rate, if price escalate to 40,000 rupees, I will get my 15%, 14%, whatever DM fees on the additional 10,000 rupees. So simultaneously, if the price will fall down from 30,000 to 20,000 rupees, there also my loss is limited to 14% on estimated cost. So DM model is always much safer than if you are buying the land and doing the projects.
All right, sir. All right.
Real estate projects, always if you have seen since last many years, I have been seeing that every year some government resolution comes. Sometimes NGT problem comes, sometimes environment problem comes, sometimes the Supreme Court guidelines come. If you acquire the land and if you are in a process, there is a big risk. But if you are in a DM model where your investment is not there in a land, and once you are getting a permission, then only you have to put most of the money. So there your risk becomes much lesser.
Also, sir, I had another question. What is the role in a Target project? Like, what are the responsibilities that you are taking over, particularly like sales, marketing, what else?
Our responsibility first is to finance the project. The money which has been required for construction, the money which has been required for paying the government premium and all. Second, our responsibility is a construction, because we being the EPC contracting company, we are doing the in-house construction also. So that is also our responsibility. Marketing, sales is our responsibility. Accounts.
Sir, on sales side, I wanted to understand, do you have your own broker distribution channel, or how does that work?
Sales and marketing also we manage.
So, आप लोगों के brokers और नहीं होते क्या, या आपके sales personnel रहते हैं? How does that work like?
किसी के नहीं होते, broker सबके होते हैं. That's why they are called broker. The broker doesn't work only for one company. Yes, we have our own sales team, we have our own sales managers, and the whole team is there.
So what is the breakup of the sales that come in, that is through brokers and that is through your own sales team?
That will start now. If you are asking for specific question for Tardev project?
No, in general.
In general, at least in a Ghatkopar, where our prominent access is there, most of the people knows me personally also, where the brokerage comes down to maybe the whole overall the project may not be even 0.5%.
Oh, okay.
But in a Tardev is a large inventory, so around more than 4,000 crore rupees sale will be there. So there we can't expect that everything will be sell on a relationship. But yes, we have accounted but that cost we don't have to bear. That cost will be borne by the owner.
Right.
Who is our partner, like who is the landowner. That's it.
Right.
If the brokerage will be saved, that will be his saving. If the brokerage will be more, that will be his loss. We have nothing to do with that. We are just the manager who are managing the show for them. The DS is the development manager. So we are a manager who developed the project.
Correct. Thank you, sir. That's it from us.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1.
I think no more questions are there. We'll wait for another 1 minute.
Sure, sir.
If anyone is having any question, or you can always send us the mail and our finance team or the sales team will reply you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to the management for their closing comments.
Thank you. On behalf of Maninfra Constructions Management, I thank you everyone for participating on the Concall. Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Please subscribe and press the bell icon to never miss another update. Please